your roadmap to the latest in auto. Welcome to Highway Herald. Today we're looking at a different kind of horsepower, the one fueling economies, trade wars, and global supply chains. For decades, U.S. corn was king, cheap, abundant, and shipped worldwide. But that dominance has flipped. Buyers now demand stricter sustainability standards. Mexico pushes back on genetically modified grain, and Canada races ahead with traceability and low-carbon certifications. This isn't a hiccup. It's a market realignment with big consequences. From market titan to strange contender, the shift in U.S. corn's position. For decades, the U.S. held the pole position in the global corn race. Superior logistics, unmatched volume, and sharp pricing made it the default supplier around the world. But by late 2025, the race looks different. Futures that briefly rallied slipped again as traders locked in profits, and analysts argued over the potential for record-breaking yields. Crop ratings held steady, but the anticipation of a massive harvest put heavy pressure on prices. Here's the real twist. Costs for farmers have climbed dramatically. Fuel, labor, and input expenses are far higher than the comfortable levels of the mid-2010s. That means when futures soften, the margin of safety shrinks fast. Export sales remain steady, Colombia 1 week, Mexico the next. But the old assumption that the U.S. would automatically win every tender has vanished. With Europe expecting stronger harvests, the Black Sea pumping out grain, and optimism rising elsewhere, America faces crowded lanes. And today, compliance rules, not just supply, decide who waves the checkered flag. And nowhere is that clearer than with Mexico, America's biggest corn buyer, where politics and culture are shaping contracts just as much as price. Mexico's hard line on GM corn, why legal wins don't guarantee market trust. Mexico has long been the United States' largest corn customer, which makes its regulatory decisions absolutely pivotal. In December 2024, the USMCA dispute panel handed Washington a clear legal victory, ruling that Mexico's restrictions on biotech corn for human consumption lacked scientific justification. On paper, the U.S. celebrated the outcome, and trade flows continued, billions of dollars worth, with millions of tons of grain still crossing the border. But the reality on the ground is more complicated. Mexico has pledged to honor the ruling, yet its government remains committed to safeguarding native corn varieties and restricting genetically modified grain from staple foods. This stance injects unpredictability into contracts. They remain large, but processors and feed buyers often hedge by retendering or sourcing elsewhere. The takeaway is sharp. Legal wins don't automatically translate into market confidence. Trust and cultural politics shape demand. Buyers increasingly demand non-GM or traceable corn, identity-preserved programs, and airtight documentation. Mexico isn't alone. Europe and Asia are accelerating these same sustainability expectations. Before we delve deeper, a quick pit stop. If you haven't yet, subscribe to Highway Herald. Your support fuels our mission to bring you the sharpest insights in auto, trade, and beyond. Now let's shift gears to the global stage where the green premium is rewriting the rules. The rise of the green premium, why proof now trumps price. Corn used to be sold on 3 basics: origin, price, and freight. Today, buyers demand proof, clear data on emissions, land use, and supply chain integrity. The EU's deforestation rules and its 2040 climate goals are rewriting procurement standards, making traceability essential. Shipments without it risk delays, fines, or outright rejection. Canada has seized this moment by rolling out blockchain-style traceability and identity-preserved certifications that follow grain from seed to sale. For buyers in Europe or Asia, that assurance reduces paperwork headaches and lowers compliance risk. It isn't always the cheapest option, but it's often the easiest, and that matters for importers under regulatory pressure. The U.S. can compete, but scaling traceability and emissions data across a massive bulk export system is challenging. Until uniform registries and seamless verification are in place, Canada is winning contracts with a streamlined solution. This green premium isn't visible on the price board, but it's decisive in securing long-term deals. But even with proof in hand, the winds of trade policy can change direction fast. Tariffs and freight volatility have the power to upend everything. Trade winds and tariff turbulence, how policy shakes the grain game. In global commodities, trade policy is either the turbocharger or the brake. and early 2025 showed how quickly it can flip the race. U.S. tariffs and threats of retaliation unsettled agricultural exports, with Reuters warning that broad tariff battles could squeeze America's $190+ billion farm sector through higher costs, weaker demand, and tit-for-tat reprisals on farm goods. When tariff volleys escalate, buyers play it safe, diversifying origins, splitting cargoes, and locking in shorter contracts. Freight volatility adds another twist, as vessel shortages, higher insurance, or rerouted traffic can drive shipping costs sky high. In that climate, sellers offering not just grain but airtight paperwork and compliance guarantees win out, even against cheaper bids. Traceable, identity-preserved cargoes are gaining value because they reduce downstream risks like delays or disputes. For U.S. shippers, tariffs can't be avoided, but risks can be contained. Those who diversify, digitize compliance, and stay agile keep contracts alive. Demand isn't vanishing, it's shifting lanes. And when we follow those shifting lanes, it becomes clear. The ultimate deciding factor is no longer just price, it's the fine print. Where the bushels land, and why the fine print decides the winner. The U.S. corn export map still looks familiar. Mexico leads, with Japan, Colombia, South Korea, Canada, and Taiwan as steady buyers, plus occasional tenders from the Philippines and Morocco. But what wins contracts today is no longer just the lowest delivered price. Increasingly, buyers demand proof through strict requirements: biotech trait declarations, residue and mycotoxin testing, identity-preserved or traceable documentation, and sustainability attestations covering deforestation, water use, and emissions. Europe sets the toughest standards, but Asia is catching up quickly. Timing also matters. Importers often strike when U.S. futures dip on harvest chatter or speculative sell-offs, while stronger foreign crop reports give them leverage to push for stricter terms. In this landscape, speed and compliance are decisive. Exporters who provide clean digital certificates and adapt to market demands gain the upper hand. The playbook is clear: expand non-GMO lanes, standardize data, treat compliance as a weapon, and diversify destinations to keep U.S. corn competitive. Which leads us to the bigger picture. What's at stake isn't just trade today, but the entire future of North America's corn story. Final verdict: the paper trail is the new battleground. The U.S. hasn't lost the global corn market. Mexico, Japan, Colombia, and South Korea remain key buyers. But the rules of the game have shifted. Back in 2010, winning meant offering volume and freight. In 2025, proof makes the difference. Traceability, trait clarity, and verified compliance now carry as much weight as price. Mexico's USMCA dispute showed that while legal rulings can favor the U.S., market trust now depends on documentation. Canada recognized this early, turning traceability into a green premium that earns premium contracts. The U.S. can still catch up, even surpass Canada, but only by scaling identity-preserved programs and digitizing chain of custody systems that global buyers already expect. The bottom line is clear: the future of corn in North America won't just be decided in the fields. It'll be written in paperwork, compliance audits, and data trails. Now, we'd love to hear from you. Can U.S. exporters truly rival Canada's traceability edge? Do tariffs influence demand more than compliance paperwork? If you were a farmer, would you focus on lowering costs or improving sustainability? Please leave a comment below to start a conversation. If you enjoyed this breakdown, subscribe to Highway Herald for more updates and insights. Your support helps us bring you the best in automotive content. Thanks for watching, and see you next time. You can now check out any of the videos on the screen. There's more exciting and informative content waiting for you.